Hello, everyone. Welcome to the stock specific class here for Thursday, July the 28th. As always, if you have any questions during the week or any that I don't get to in the live class here, make sure you send those to jerry@traderspro.com. I'll be happy to answer those for you. Obviously, we've had some big events take place. We do have some big earnings coming out after the bell today, but based on the way the market reacted to, the Google and Microsoft earnings on Tuesday, and then the Fed meeting yesterday, I would imagine that it would have to take a very shocking negative report to freak the market out, and even then, even when it seems like it's been freaked out, it's kind of shook it off. I told you we might get a few whipsaws this week, and we have seen a little bit of that. We'll look at the charts here in just a second. But I also go back to what I was focusing on last week, where I just felt like the market was wanting to go higher. We had that bearish reversal on Friday. On Tuesday, I talked about how I just didn't. You have to respect it. You have to respect that we could drop from that type of chart pattern and from that type of price action. But it just had a feeling of the VIX just wasn't acting right. The VIX really wasn't confirming that there was fear building. In fact, just the opposite. It was signaling a lot of complacency, and I think we're starting to see that kind of play out. Now, I don't know if we rally from here. I don't know that it'll be sharp. I do expect at some point, if we continue to rally, that we'll get a kind of a melt up where a lot of the short traders out there start getting squeezed, and they have to get out of their positions very quickly. And then you get people that are chasing the move that start jumping in. So I think that dynamic is still likely to play out at some point. But until then, it's also possible we see a lot of just choppiness back and forth. One day the market being interpreting the news it's hearing as being more positive, next day more negative, and kind of creating more of that back and forth. The bottom line is the way the market is behaving whenever it's whipsawing like this back and forth, it is a reflection of indecision. It means that the market doesn't know exactly what it wants to do, where it wants to go, and it plays that out right in the price action there. And so what you have to be careful of is to be in a condition like this and start making strong predictions or something like that, or getting strongly bullish in this type of environment or getting strongly bearish. You need to resist that. In fact, do the opposite. Really keep yourself in check by taking another argument. When you find yourself getting pretty bullish or really feeling like the market could go up, start looking for reasons why it could go down, and what scenarios, what levels on the chart would signal that it's more likely to go down or go up. I do this all the time in the classes, but I don't do this just for my fun. I do this to teach you that this is what you need to do. You need to have a game plan. You need to be looking at offense and defense, so to speak, to use the football terms. You need to be able to recognize, hey, if it gets past this level, I might not be right. And I can show you that when we look at the S&P chart here in just a second. That happened yesterday after that Fed meeting. Immediately looked at it and said, okay, this is not confirming what happened on Friday. I need to flip-flop a little bit and get back to being a little bit more bullish. But as far as starting with the directional alerts, there is some significant movement in the directional alerts. We're still in a bear market, but we are seeing some shorter-term signals here. The momentum indicator is moved into the extreme range. Now, like I said, I didn't get to the far right side of that extreme range, so it's not that we're not yelling that the market is overbought and has to pull back right here. In fact, just the opposite. I think it could start to push pretty strongly upward, and we might need to see that get all the way to the far right side before we even start thinking about a possible correction of some sort, or reversal of some sort. Brett, as you can see, is lagging a little bit, and this is a reason why I don't think a pullback would be imminent if the uptrend is going to continue, because usually you'd like to see both these indicators get into that extreme range when you're starting to get close. So there's room to run. If the market wants to run, this is showing you there's still some room to run, and there's room to go the opposite way. We could suddenly reverse and head back the opposite direction. We've seen that happen last week there as we had that bearish reversal. Sentiment is still high. It's been high, but it's starting to move into more extreme complacency in here. We'll keep an eye on that. If we start to get over to this side, then that's when you know that you might be in for even a little bit of a bigger correction possibly taking place if that happens. But and then with the buy-sell ratios, they're wide. But again, we talked about this on Tuesday. Not much has changed since Tuesday here. We're kind of in this range right here, but we've seen it's been more extreme. So I don't see anything that's screaming, market pullback in that. This sentiment indicator is starting to get pretty close to the overbought area, but still, again, it's still got some room to run up into that. And any sort of down day sometimes can bring this thing down. You can see it happened recently here. We had this sell-off last week, brought it down a little bit. So nothing to be too concerned about yet as far as any warning signs that were overbought or overdone. But again, we're in a position here where we haven't had 4 or 5 days in a row moving in the same direction. If we get 4 or 5 moving days in a row upward, then we could see some of these start hitting extremes pretty quickly. It wouldn't take that much to get them into those levels. And even then, though, again, this doesn't mean that you're going to get a big pullback at that point. It could just mean that you get a consolidation, it moves sideways for a few days, alleviates that overbought condition, or maybe it just pulls back a couple days. It's all part of the stair step. You get extreme, you pull back, you alleviate that overbought condition, you rally up, you get extreme, you pull back, you alleviate that overbought condition. But what this is marking is you're marking when you're at these extremes where you might be in an area where you can start to see a pullback or a correction, or even just moving sideways. That can alleviate an overbought condition. So it just helps you to kind of gauge where you could be within a trend movement, and help you make some of the decisions you might need to make based off of that. All right, let's get to the chart. So again, what we're looking at Tuesday, what we were looking at on Friday was, again, we're still looking at this as a bearish ABC pattern, had a bearish reversal candle. Here's Monday's move, here's Tuesday's move. Tuesday was kind of confirming that. In fact, we were going to get a close below the low of the previous day. Now, again, this shows you that confirmation technique doesn't always work. The market did shake that off and reverse right away. But there isn't one. Most of the time in a bearish ABC pattern like that, you get that confirmation. It closes below the low of the previous day. Most of the time, it's going to make some sort of a drop off of that. So it works enough times to where I trust it. In this case, I was using it to stop out. I was using it to, stop out, because I remember I had a long position. I was still expecting this thing to go higher. I was long the SPY, got the bearish reversal candle. I wanted a little bit more confirmation on that. So I actually stopped out of this trade, and then I might jump back in it again. And this time what I can do is I can use this low as a stop. And I think I'm going to jump back in it again and see if this thing can continue to run. Now, again, the key levels now that we got to be really watching are going to be up here at about 415, 416, somewhere in that area there. That would be the, going to, that was the last lower high before we hit the lower low right here. And that would be a really strong signal of potential change in trend direction. Obviously, in the near term, you now reach higher highs, higher lows. It shook off this. This became a higher low, and this was a peak right here we broke above. So again, when we closed above there yesterday, and before the Fed meeting, we were trading below that. And as long as we were trading below that, there's still a possibility this thing could reverse and go down. But once it closed above that, it increased the probability that it's going higher. It's acting like it wants to go higher. There is a lot of resistance in this general area. We talked about this gap right here, and obviously we're clearing that today. There's a lot of congestion into here. We hung at support right there. We had a couple of touches in this area right here, and this goes back even further. So, I mean, there's a lot still to kind of clear into here, and you can't. This still looks corrective to me, more choppy. This was more impulsive. So, again, you still have to. I still don't feel like the market's out of the woods yet, as far as not having this not being a correction for another move down. We could get if we got a really big bearish reversal candle and the VIX really spiked up, and it was maybe based on something, some event, I don't know what that would be, but something that really freaks the market out or something, then this thing could still drop. It could still drop from this area right here. The pattern is not, it still kind of looks like a correction of this move, despite how deep the retracement is. I talked about this a couple classes ago that, usually when you get above that 618 retracement level, and we're looking at the retracement of this move down, that 618 retracement level was really right where we were at right in here. I think we're a little bit above it. Now we're clearly above it. The probabilities of that now being a retracement for another move down become less. The probabilities drop, but it's still possible, and you still can't say we're out of the woods yet. There's very rarely anything that you'll very rarely will you ever hear me say this is definitely going to happen, or this is guaranteed to happen, or I might say there's a very strong probability that this is going to happen, and I might be very confident in something based off of a number of things I'm seeing. But we're always kind of skating on the ice, where we know you can slip at any time. We know it can reverse at any time, and it can make moves that don't make sense. Any trader that's been doing this a long time knows that there are times when the market makes the lower probability move, and everything was pointing to it going up and it drops, or everything was pointing up to it going down and it rallies. That's what keeps everyone on their toes, and that's why you have to embrace the uncertainty. You have to embrace that, because you're going to deal with it your whole trading career. And it doesn't matter how many books you read, it doesn't matter how many gurus you follow or software programs you buy, it's not going to eliminate those events. They're going to happen, and that's why I say just embrace it. Embrace the uncertainty. Make the uncertainty your friend, or at least get comfortable with the uncertainty, because it's going to happen so often. You got to be comfortable with it. And by the way, again, this ties into something I say all the time. Well, how do you get yourself comfortable? How do you make yourself comfortable? Well, again, it starts with risk. It starts with not having so much risk in your trades and in the market that you can't sleep, or that you get stopped out and it freaks you out, and you wonder how you're going to survive, and you think you're going to be living in a van down by the river. If you can keep those risk amounts low to where because there's transactions you make all day long, and there's transactions you have all day long that don't work out. You go see a terrible movie at the movie theater, and you feel like, man, I wasted that $15 or however much it costs you nowadays to watch a movie. But you don't spend the rest of your week lamenting that decision and how it was the most terrible thing in your life. Why? Because it was $15. It wasn't so much that it's worth severe depression or something like that. Now, I'm not trying to say that our transactions in the market have to be $15, but we need to bring risk levels down, because everyone's different. I don't know where your risk levels are. You've got to find out where your risk levels are. Where can you operate where you don't freak out and you're okay? What is that amount? And part of it we do when we're entering trades. I'll show you. I'm going to add that SPY trade. We're going to look at focusing on the risk amounts, making sure you can accept those risk amounts and be okay with it. And some of you'll have to lower them. Some of you might even be able to raise them a little bit. But be honest with yourself about where they're at, because it'll make your whole trading experience more enjoyable, and it will bring consistent success, because you're making decisions based on why you should be making decisions, and not based on fear and based on man, I'm not going to be able to make my mortgage payment because this trade's not working out, or something like that. All the things that destroy other traders, you'll be able to get past that. All right. So S&P charts looking strong, and it's been kind of gaining strength throughout the day, which is I like to see that throughout the day. I'd like to see the steady increase throughout the day. We opened a little bit weaker, and then we just have been kind of steadily moving higher. It tells you that there's orderly buying coming in, and that's usually a pretty bullish sign. We'll see what the volume numbers look at the end of the day. There seems to be good market breadth in the move, a lot of participation. Dow, again, that chart looks the same. NASDAQ has been kind of the leadership group lately. It's still just kind of getting above that Friday reversal. It is above it, but it's lagging a little bit. You might attribute that to Facebook's and Qualcomm's earnings maybe dragging it a little bit. Still kind of digesting the Google earnings and things like that, but that's you'd want to see that continued confirmation that it's kind of breaking out higher. Remember, this is very close. This is the area right here that we're looking at on the S&P. This June high right here. We're very close to breaking above that. And remember, NASDAQ, the tech stocks, they tend to be a leadership group. If they start breaking above those levels, if they break out above here first, that would be very bearish for all the other indexes. It would mean that they are likely to follow. Maybe not follow immediately. Sometimes we use a term leading indicator. We assume that the followers follow immediately. Sometimes it could be several weeks, or sometimes even several months. The Russell 2000 was showing, as a leadership group, was showing they were showing a bearish divergence to the rest of the market for months, almost all of last year, before the market finally broke and we had the start of this larger correction. It was warning for a year that it wasn't looking right. The chart was not confirming what the movement of the other indexes were doing, and we noticed it. We pointed it out all the time in these updates, but it was something that didn't happen immediately. It was something that we just tucked away as a warning sign. And sure enough, when it did, and the market did start to break down, and the small caps were leading the way down, it made sense. It was, it's like, okay, now it's happening. We were seeing it could happen for several months now, and And so so we look for these little clues, but you have to tuck a lot of stuff away. So have a nice section in your brain that you can tuck some of these clues away, because like I said, they may not show up immediately. Their impact may not show up immediately, but it's one of many things that if you look at it collectively, that it can be, they're warning signs ahead of time that if you're paying attention to them, it doesn't catch you by surprise. And in this case, this would be more bullish if it could break out above there before the rest. That was the last lower high before this lower low right here, and breaking above that would tend to look more bullish and look like maybe we're moving up to the right side of the bowl. All right, so in the Russell, we're starting to see the Russell outperform a little bit. Now, it's still a little ways up here from its June high. I don't know if it'll get there before the NASDAQ 100 does, but we'll see. Now, it would make a little bit of sense why the NASDAQ 100 might get there before the Russell 2000. Right now, the traders are finding safety in, they're just avoiding stocks that aren't making money. The big tech startups that were the big SPAC stocks that were the craze a couple years ago. Nobody wants to touch them now. The meme stocks that were the craze a couple years ago, nobody really wants to touch those now, or they're trying to avoid them. There really is a focus to stick with Google and Amazon and Apple and some of these larger tech companies that are making money. And so that's why it's not too shocking to see the NASDAQ 100 kind of being a little bit more of that leadership right now than the Russell 2000. But watch this carefully though, because if this really starts taking off and these small caps start really outperforming the other indexes, that's a really bullish sign that the big fund managers are back into a risk-on mode. They're taking more risk now, and they're not going to take more risk unless they're optimistic in the economic future. So that's kind of what I've been looking for, is to see when they feel confident to get in. You'll start to see the VIX drop more dramatically. That's another sign that you would see. And then small caps outperforming. And by outperforming, I mean what will happen is you'll see, Russell will be up 1.5%, while the S&P is up 1% or something like that. It'll be a real subtle difference, but it'll be up by a bigger percentage. Let's see where that is right now, just out of curiosity. NASDAQ 100 is at 80.81%. So Dow is up 1%, and the S&P is up 1%. So we're not really seeing that outperformance today. Pretty close, but that's something you could look for. Is you have a day where the Russell, the percentage move of the Russell is twice as big as the S&P, or 1.5 times as big as the S&P, or something like that. Those are kind of subtle clues you could look for. All right, bonds. We've been watching this high right here. We're getting real close to getting to it, but we haven't broken above it yet. If we can, that'd be very bullish. We talked about this as a potential inverse head and shoulders pattern. It just has a look that it might be this might be the time where it changes trend. It's not surprising that it got up to that level and pulled back, got up to this level, pulled back. Usually the third time when it tests the level is usually when it breaks through. So I imagine the next move up is if it's going to break it, is probably going to be where it breaks it. I thought we'd get a little bit more clarity by today on that, but we might have to see what happens with that on next Tuesday. that it does look like it's possibly starting to change trend direction. Gold had it was moving a little bit sideways here. Had this move down. It spiked up a little bit the last couple of days. So we'll have to see if this is starting maybe an impulsive move. I really haven't trusted the movements in gold. A lot of this comes back from I can't remember where the article was, but there was an article a couple of years ago that I think it was Goldman Sachs. It might be, I don't know, Goldman Sachs or J.P. Morgan. One of the banks was manipulating the metals market, manipulating prices. And I don't. Sometimes I really have the time or care sometimes to spend the time to investigate exactly how they were doing or why they were doing it. But all I know is they kept getting fined for it, and they still keep getting fined for it. But the fines are like, a $10 million fine, and they pay it immediately. It's like, okay, if you're paying them and you're not even questioning it, that usually means you're probably making billions, and you don't. The $10 fine is like the price of admission. And so I don't trust some of these moves sometimes, even these high volume moves that take place, because I don't know enough about the commodity market to know how to recognize them as being manipulative moves. So I just usually steer clear of it. And a lot of it too comes from just a few years ago trying to trade, particularly silver and gold, and always just getting hammered. And I'm reading the charts and the price action, and I'm getting hammered nonetheless. And it got to a point where it was just like, okay, either it's really bad luck for me, or something's not normal here. Something's not normally playing out, because the system I use is based on a market system and the way the market works. And then I read that article about the manipulation going on, and that they keep getting fined, but they just pay the fines. And so I have a tendency to try to just not trade these. No, I do look at them, because you do have to kind of watch them. They do kind of relate to, and they do correlate with. They do have some correlations with normal relationships with the dollar and things like that we see, but you just have to be real careful. Usually, I tell people, if you're going to trade commodities, you have to really specialize in it, so that and you can maybe recognize when some of these guys are you can know learn their tricks, learn how they're manipulating things and how they're getting away with it and all that kind of stuff. Oil. This is, again, I've talked about this being a bullish ABC pattern, and this is a nice move up. This is looking a little sluggish right here, though. So it has me a little bit worried that this could be a larger ABC pattern. This could be a start of a move up. And this might be A, B, C. Maybe we come down here a little bit and then go up again. But this is a sluggish move right here. It looks like it could drop a little bit in the near term before going higher. My stop's down below here, so it's not going to, I don't think it's going to bounce me out, but we'll keep an eye on that. I'd like this thing to start taking off again if it's going to start trending up pretty strong. Otherwise, it could be still in a little bit of a near-term correction. The dollar, we're still kind of in the sideways range. We talked about this, had an impulsive up, we have impulsive down. We've been in this little sideways range right here. Big move down on yesterday. We've kind of held this support, but it still is acting like it wants to at least make another move down. That could just be wave C and then takes off again, or maybe it starts a trend reversal there. But that's what I'd be looking for, is looking for a weakness, another move down on the dollar. And the VIX, you can see the day turned me a little more bullish today. Got a pretty distinct move down on the VIX. And yesterday's move, remember yesterday we we broke out above that Friday high. We closed above that Friday high. VIX made a new low off of that. So, it's looking more bullish right now. Now we are coming down to some support here in the VIX. So we get a bounce off of this. We'll have to keep an eye on that, see if there's, then that could be something that happens after tomorrow, after today's earnings come out, Apple and Amazon and all that. But I just don't see, we've already been seeing kind of the disappointment in some of the earnings. I just can't see that. I can't see that we're not expecting to see some weakness with Apple and Amazon. So if they miss, they'll probably miss somewhere. At least that's been the pattern. But the big question is going to be: is there a catastrophic miss that really just freaks everyone out? That's the only thing I can see really causing the market to sell off or change this direction. And I haven't heard anything from rumblings or warnings from Amazon or Apple in particular of possible catastrophic things. And sometimes they'll try to hint it when it's about to happen, just so it lessens the damage. But I don't know. I think that it'll be something similar to what we saw yesterday, where you have some reports that seem to disappoint a little bit, but it doesn't shake the market up too much. Chip stocks, again, shaking off this little drop. Looks like they're breaking out again. I might take another look at AMD too, or as a or Micron or something. Let's check some of those to see if we can maybe get a little bit more exposure to the chip sector, as long as it's going to continue to strengthen there. Dow Transports, nice strong move today. Breaking above that Friday reversal. And Bitcoin has even had a little bit of a bullish couple of days here. We were talking about maybe this was a kind of a false breakout and that this is going to lead lower. Well, now, if Bitcoin can get above this high right here, you actually have an opposite. You actually have what will look like more of a basing pattern then, because you've got a lower low right here, an even low right here, and a higher low right here. You have a breakout to a higher high right there. You'd have a breakout to another higher high right here. And it could be that it's forming kind of that bowl-shaped move and could maybe start taking off. I have to keep an eye on that, watch that, see if that behavior continues. All right. So, leaning a little bit more bullish. We are creeping up with those. So right now what I'm doing is I'm just kind of ballparking the analysis here. Okay, we're just putting it all together. I say we, but I'm talking about me because you may disagree. But I'm feeling more bullish on the analysis I just did. We do have to recognize that we are getting close to those extreme levels on the direction alerts. But we can get more extreme. We can get more. We're not extremely overbought yet, but we do have to factor in that if we get another couple of days where we rally, we could rally a couple more days, especially if we rally into this key area up here about 415, 416, and maybe we start hitting a lot of extreme reversal risk signals. We got a little bit of a pocket right here, so we don't want to go crazy, I don't think. We don't have enough bullish confirmation yet to say this is it. This is where we really want to get aggressive. But we can definitely add some things and start try to take advantage of the conditions being more bullish than they've been in a long time, and see if we can't get some of these trends to work. In the portfolio, I got out of the inverse ETFs yesterday when it looked like we wouldn't need them anymore. I'm going to get out of ECPG today, and the reason for that is, well, we're up against this bull. I talked about this a little bit on Friday or Tuesday. We're back up here. It could break out and go higher, but a lot of times it'll hover around this area a little bit for a while, or it'll pull back from it a little bit, or if it does break out, it'll break out and then come back to it and test it for a little bit right here. This is a pretty sharp move right here. There usually will be some sort of consolidation that follows. Now, I mentioned that one of the techniques you could use as an exit technique is to just wait for it to close below the low of the previous day. It might not end up doing that. It was down below here today, and I was going to get out of this earlier. And so that's the reason why I'm going to go ahead and get out is when it was trading below there earlier in the day, I wanted to get out. I thought I'll just wait till class so I can do it in class and try to do as much of this in class as I can. I'm okay with taking the profits right there. Like I said, I feel like I can get in again. I've got a clear area here that I could work with. Let's say it pulls back and then breaks out again, and I could buy the breakout, or it consolidates along here and then breaks out. I could buy the breakout. Or if it breaks out and then pulls back and then starts to move again, I can always get back in. You know, I can find ways to jump back into this thing again if I want to. But I'm going to go ahead and get out of that one. Book some profits on that one. We've had a nice gain here. We got in at 63. We're getting out at near 70. So let's go ahead and sell 150 shares at $69.95. It's almost $1,000 profit. All right, and the other positions, USO again still looks okay. Lilly, still wait for that to break out. That still looks okay. Raytheon, nice sharp move up today. We're kind of near our stop area there, but we'll see how that goes. Oh, am I still in the SPY? Or did I just add that? Did I just add that? Or maybe I added it before class. Anyway, I'm in the SPY. I wanted to take a look at AMD. Let's see, AMD looks like. Let's see, it has a stronger strength rank. Micron. Ooh, Micron's pretty low. NVIDIA's at a 74. What's AMD again? 79. So we're down a little bit on the, yeah, I'll wait on this. Because I'd like to see it. None of these have cleared that Friday. Actually, this was Thursday, I think, right? Thursday, Friday, Monday, Tuesday, Wednesday, Thursday. Yeah. That previous high right there. Yeah, I'm all right. All right, let's take a look at some stocks that we could consider. Let's go into the sectors here. Start with consumer staples. There's quite a few in here that have decent patterns. Hershey Food Corp, HSY is a ticker symbol. A little lower strength, I think, at 88. But I like the behavior through here. Moved up, pulled back, kind of double bottom right here. Had a nice breakout to a higher high. Impulsive, corrective, and it looks like you're breaking out another impulsive move. Now you do have this resistance up here. But if if the economy is, and the markets in general are going to be getting better, it should break out above there if that trend is healthy. I'm not saying by the way, with all these, I'm not saying go trade all these or you have to trade all these. I'm just pointing out patterns I like that are in stronger sectors that have high strength rank stocks within the stronger sectors, and just to kind of give you some ideas. Consumer staples. There's this is going down the list a little bit. There's Coca-Cola, 83 strength. But we pointed this one out a few times. I've liked this one, and when I showed you before, this looks like a larger correction, impulsive move up, and this smaller correction. I've talked about this for a couple of weeks now, and this has a nice little pop off of that. Still room to run. But I mean, look at that pattern. You had lower highs, lower lows. A little bit of a lower high right there, but there's a higher low. And again, right here, breakout above here. Now you've got a higher high. It just looks like it's transitioning from a downtrend into an uptrend. Chef's Warehouse, CHEF, 92 strength rank. Yeah, like this impulsive move up, and then this looks corrective, choppy. Maybe wave A, wave B, wave C. Needs confirmation. It was down. It's down today. You're right at about that 618 retracement level. So you could wait for this to go back to a buy signal as confirmation. But the pattern and chart behavior looks pretty bullish. It looks like it's acting like it wants to go higher. Grocery outlet holding, GO is a ticker symbol, 91 strength rank. Now the same thing, you probably want it to go back to a buy signal, but there's this little pullback within the uptrend, and it's had a few of these pullbacks that have just been straight pullbacks, not real much of an ABC in there. This one is a little bit more kind of ABC. It's been a nice little long uptrend there. And then Tyson Foods down here. Just pointed this one out because of today's move. I mean, it went to a buy signal today, but you can see, you had lower highs, lower lows. This was the lower high before it hit the lower low, and then we've broken above it today. This is very early. You might want to see how the next pullback looks. Does it give you a higher low on the next pullback? But that's one that it's just early sign of possibly reversing trend. I saw that one. I thought, this would be a good one just to show you what I'm talking about when it looks like it could be showing you those early clues of possibly reversing trend. All right, let's jump into computer and technology. There's this AZPN, Aspen Technology, 93 strength rank. Again, this looks like an ABC correction. Nice bullish move yesterday. Nice overall uptrend. Went into kind of the buy in computer and technology. I went over the buy section here. These already have buy signals. Looked at AEHR, 98 strength rank. Again, this jumped out just because, again, it looks like it's kind of moving up the right side of the bowl, went to a higher high. This could be that higher low. Started moving up off of that. Now, it could be this is wave A, wave B, and you get wave C, and then it starts moving up. But this is one to keep an eye on that might be working its way up the right side of the bowl. One of my favorite patterns to trade, to look for and trade. Albeit, I prefer that it works better when you're in bull market conditions and you see it. But, if we start moving into more bull market conditions, and we're going to probably see a ton of those out there when the market's finally bottoming and start going up. And then this GoGo 96 strength rank, GO is the ticker symbol. Again, this is kind of based off of just a larger, you got this long-term uptrend. This looks like a larger, deeper ABC pattern. Looks like it's coming off that. Now, again, it could reverse and come down. It could be stair-stepping down. So you don't want to look at this and say, this is going to go all the way back up. But it gives you something to manage. You could put a stop down below. That's where you know you'd be wrong. You can get in on a buy signal. Here's your target. You got a 3-to-1, 4-to-1 reward to risk. Take those type of trades all day long. And then a couple under the medical sector. CTIC, City Biopharm Company, 99 strength rank. Again, just a nice little steady uptrend here. It looks kind of like a bullish ABC right here. It might be completing, start to move back up again. You could wait for it to go back to a buy signal as confirmation. Get back above this breakout. This looks like it's back above that breakout area. ACET down here, ACET, 98 strength rank. Again, looking like we're working up the right side of the bowl, impulsive up. This looks corrective. Maybe wait for it to go back to a buy signal or break out above that sideways range. But it should take off. Whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. Not exact, but you're typically going to be right if you follow that rule of thumb. And last one here, KZR, 98 strike drink. KZR Life Sciences, I pronounced that right. And again, kind of forming this bowl-shaped move. It's moving sideways right through here. Now, probably you'd like to break out. I don't know how long it gets. That's a long sideways move. I don't like to see indecision last that long. Maybe wait till it breaks out. But definitely potential to get back up into this area up here if it does. All right, that's all I have. Take one quick peek at the market before I sign off. S&P still looks strong near the highs of the day, so we'll see if that closes that way. And but again, what I pointed out earlier, this all is a reflection of indecision. I mean, it's market trying to figure out where it wants to go, and so it's in these conditions, you're going to get stopped out of trades. You always end up working twice as hard for half as much money. It can be frustrating sometimes, but that's where the market will test your patience. But the bottom line is you let those big professional traders figure it out. What are they going to do? Until they decide what they're going to do, we're going to wait, because we just want to follow them. That's our competitive advantage. That's what we're good at. But we got to wait till they decide where they're going, and then we'll trade in that direction. All right, thanks, everyone. Have a great weekend. We'll see you back here Tuesday for the market update class. If you have any questions between now and then, send those to Jerry at traderspro.com. And we'll see you then. Bye, everyone.